The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis, and this is a happy day, August the 19th. Let me explain to you where I was 52 years ago today. I was in the delivery room at UCLA Medical Center, Obstetrician Division, and we were delivering our first little girl. And son of a gun, here it was at 3 in the morning, and I was in the room right there, right behind Dr. Robertson, and he had pulled her little head out, and she had his little shoulders there, and he turned around and he said, "Okay, Pops," he said, "take her in to the rest of the world." And so I reached down and I pulled the little girl out, and by golly, that was the sixth baby and my last one that I ever delivered. I delivered 5 during the time I was a scrub nurse at St. Anthony's Hospital during the 11 to 7 shift while I was going to school. For those 5 years, I worked 11 to 7 days a week, and I lived in the hospital because they no longer had surgical residents there, and so I had a nice little apartment to live in the hospital, and so I got free room and board during that time as part of my salary. Folks, we've got a big day here today. I posted a chart of the Bradley model. I don't know if it's going to work or not. Nobody else does either. One of your greatest frustrations in life are unfulfilled expectations, and this certainly could be one of them. But I did want to bring something to your attention just to show you, it does have some good, it's not perfect, but boy, when it is, you have to pay close attention to it, really. Here is the Bradley model going back to, by the way, we'll have Shane Smolian as our guest at the break here. I just wanted to show you the Bradley. If you'll go back here to November, you can see November of 2016. I don't know if anything was happening there at that time or not. Was there? Was there anything big happening in November 2016? No, I don't think so. Anyway, you'll notice it had a low, and look where it went to, folks. It went up into January of 2018. Now, when it works really, really good. And when it doesn't work, it doesn't work. You got to remember that. And today is the Bradley day. It only has a 2-day window. So if it's not down into Friday, then something's wrong and it just doesn't work this time. But remember, you can do this chart that we just did. You can do this 300 years, 200 years, 500 years, 1,000 years, 1,500 years out into the future, and it's not going to change. Why it works, I have no idea. So all I know is let's pay close attention to it. We're seeing divergences between the Dow Jones, of course, not making new highs. We got up to, I believe, 33.93.75 in the S&P last night. We made another new high in the NASDAQ last night. So all of that is lined up. We certainly have bullish folks out there. I mean, they really is big. It was created by a man named Donald Bradley in 1946. He wrote a little pamphlet, a 47-page pamphlet called Stock Market Prediction, and it was sold by Llewellyn Publications for $4. When I found the book, Dr. Miller had given it to me, and it was selling for $500. Not then, but it was. You could. There was no internet, so but you couldn't even find the book. I think Norm Winsky paid 10 cents for his in a little bookstore there in Terre Haute, Indiana. But it was very, very. They didn't sell many of them. I think it only sold 200 or 300. And you can stop and think it was a paper pamphlet. It wasn't hard copy. It wasn't a hard copy. Anyway, but it was proven because there was a dude down there at Yale University in astrophysics that showed that there was strong positive things and strong negative things about certain planetary combinations. And that's what Bradley did. And then he looked at it. Someday this Bradley model is going to be on CNBC or Bloomberg or someplace like that, but it'll be backed by Yale or TFNN, MIT, and that's what'll happen. It's not going to be backed by an old worn out cowboy over there in Tucson, Arizona. All I know is that when it works, it works. So just like the AI thing, when it works, it works. When it doesn't work, it doesn't work. You got to rely on the biggest cycle of all, folks, and that's the 9-inch cycle between your left ear and your right ear. That's the one that's really, really important. We've got to remember that. So it's very simple. If we're down this week, the Bradley model is starting to work, and you'll see that it has a pretty big move down into December 2nd. And that means it has negative bias during that time. Is it going to be a bias? Heck, I don't know. But if it does, pay attention to it. Look what happened on election night. That was, I think that was November of 2016, wasn't it? Yeah, that was a big surprise. So who knows? All right, let's take a look here at some of the other things that we've got moving on here. Let's just get up here and take a quick look at it. I want to talk a little tiny bit more about the U.S. dollar index because we are still hovering right near this. Sorry about my voice, folks. It's these Palo Verde trees. So we got a little bit of rain yesterday, and boy, anytime that happens, they start to bloom. But you'll notice here, this is going back to 2011 when Tom called it the King Dollar when it was a 72. We had the double top up here, and now we're approaching the 78% retracement, very similar to the retracement that we had. We're making 78% of that move that we had between 2016 and 2018. And also, if you look at the double top there, you'll never guess when that double top occurred. You'll never guess November 2016. So we got a lot of things going on here with this U.S. dollar index. So we'll see whether this is going to mean anything or not. The actual 78% level is 91.63. So it would not be unusual to see the euro get possibly up to that 120 level. But at that level, it's going to be very interesting when you look at this on a long-term basis, because if that 786 breaks, boy, we're looking at some really, really serious moves down in the U.S. dollar, and that will affect a whole lot of things. Now, we have some nice moves in gold. It went up $40, came down $40, went up $40, went up to the 78% level just a little while ago at $202 per ounce. So we're going to see what occurs later today. But we have some strong support down in the U.S. dollar, down around the 1940 level. If we should get there, that would be down. Excuse me, folks. That would be down $130 from the high if we get down to that level. So we're keeping a close eye on that. Now we're going to have Shane Smolian coming on at the break because he's got a lot of good information. He's going to be talking to us about the Bradley, probably saying everything I said is full of baloney, and it might be, but you have to pay your money and take your choice, and he'll give us an idea of what he's looking at also with the Bradley model. It's nothing more than a cycle, folks, and as I mentioned before, the greatest frustrations in life, in trading, in business, in marriage, whatever it is unfulfilled expectations. So if this doesn't work, don't be surprised and just move on and get back to the old 400-day moving average. 877-927-6648. Stay tuned for Shane Smolian.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And I believe we have Shane Smolian, the wolftrader.com, on the line. Shane, are you there? Uh-oh. Technical difficulties. Nothing like a way to start the show. Evidently, we have to get him back on the line to see what's going on. We had him just a minute ago, so we'll see if we can. We'll let TFNN try to work this out. There he is. I think he's coming in right now. His G7 must be landing there in Miami. Are you there, my friend? Uh-oh, not hearing anything. And boy, it was
Larry,
really...
Can you hear me?
Oh, there we go. We're ready to go. We're all ready, my friend. I'm going to turn over the mic to you and tell us what you're looking at today.
Well, apparently we don't have any charts, so I'm going to have to just narrate this to you. There's no way to share the screens today, according to your producer. So maybe we can. Maybe I can send you the charts, and then we can try it that way.
Why don't you send them to me on Skype, and I'll try to repost them into the den, and that'll be be really important to see those because you do such a great job with those. I wonder if I think I made the mistake of calling in on Skype 2, and I should have called in on Skype 1. But let's just go ahead and see what you've got here, and I'll try to put these charts in and see if we can anyway.
Essentially what's going on, I kind of need the graphics, but I'll try to describe it the best that I can here. I'm going to send you a chart right now. Okay, so first of all, I'll try to narrate this, try to visualize this. Start out real quick with the COVID numbers. So I always track these COVID numbers as the density function, the percent of positive tests, and we are down to 6.9% now. We had a peak in July the 12th of 8.8%. So that's looking better for the coronavirus for sure, and that's good. So it seems like we had the second peak that came up in July, and now we're headed back down. I have us slated for another peak to come in November, so it's that'll be right in time for the elections. But it seems like the last peak was much lower than this one on a percentage basis.
Okay.
So I sent the charts, so hopefully you can.
How did you send them, my friend? Did you send them through
on
Skype?
I sent it on Skype. Yep.
Okay, let's see if I can pull it up here. And wow, this is tough when you've got this thing not working the way you'd like to see it, especially when you're technically inept like I am. I still don't. I don't have any in the Skype chat room. I don't have any charts, my friend.
It's a PDF or PowerPoint file. I can send it as a PDF if you want.
Oh, just as long as I get a chart. If we, I don't, here I'm technically, I'm in trouble. The problem I have understood now is that it has become, Skype 1 is temporarily down on Skype, so that's why we're using Skype 2 right now. But I don't have any way. Let me try this. I'm going to hit start sharing. That doesn't help either. So why don't you just discuss what you're looking at, Shane, and maybe we'll have you on again on Friday to maybe share some of these great charts that you have on the virus thing. And then also we need to talk about the Bradley model, because today's the day the Bradley model supposedly, and it may or may not work, but if it does work, it'll work pretty good. So I certainly want to, relay that information on to the folks here at TFNN, but I'm still not getting anything. Could you drop it into the chat room, and then I could copy and paste it into the TFNN? Would that be?
Yeah, I put it on the Skype chat. I just dropped it in there, but
well, why am I not getting it?
I put it on your Fibonacci. You want me to put it on TFNN Skype too? I'll put it on there.
You put it on the download. I got it. Now I know how to do this. Shut the front door. This is a PowerPoint presentation, correct?
Yes, sir.
All right. Well, I think we'll be okay then. All I got to do now is I go over here, and then I go over to my File Explorer, and I go over to File Explorer, and I go to my downloads. And this is a trade what you see, Bradley. Is that what it is? Is that the
yes,
PowerPoint? All right,
yes,
let's get it up here. Oh, look out now. We're rocking and rolling. Here we go. Here comes the first chart, boys and girls. Get ready. Keep talking, my friend. You're in business.
Okay. What chart do we have up there? What does it say?
This is the U.S. is on the verge of lockdown 2.0.
Lockdown 2.0. Yeah, no, that's not the right presentation. Can you go?
Oh, dear.
Trade what you see, Bradley 819. Can you go to the one that says Fear and Greed?
Okay, let me do that.
About
just give me
15 slides in. Let's just go to the markets.
Okay, don't see. I see the PowerPoint, but what number is it that you're looking at?
It's like slide 15.
Slide 15. Okay.
Yeah.
I have the coronavirus impact is what I see on that one. I don't have fear of greed on that one. I saw the fear of greed earlier this morning, but slide 15 is the coronavirus. Boy, this is not working out the way I wanted it today. Unfortunately, it's the first time we've had a really bad technical problem, but that's not the one that I have received, evidently, my friend, because it's the only. Oh, wait a minute, there's another one in here. Hold on just a second. All right, they just have to get rid of this one. Oh, it won't. I've got to close one before I can do the other. Oh dear. Now keep talking, my friend, and I'll try to get this thing straightened out if I can. Go ahead, tell us what you're looking at anyway. And
so the fear and greed index is up to 70, and that's climbing up pretty good. I mean, we got up to levels around 90, high 90s before in the February peak of the market, but that's still getting into the sentiment's getting pretty good in terms of a bearish case, but it's not as high as it was back in February before the coronavirus. Now, one of the things that I talk about in the newsletter is I call it the three-headed dragon that's controlling the S&P. we have the three heads of the dragon are the astrology and the seasonals, which is what you talk about with the Bradley, of course, and that's peaking right now. And there's a lot of Astro coming in right now, but we also have the Fed juice and we also have the dollar juice, and these are the other two leading indicators that control the market. And so when you get a wild dollar on top of the Fed juice, on top of the Astro, you really have a tough beast to tame because the market tends to go absolutely crazy when the dollar has these days when it just drops straight off a cliff like it did yesterday. Mm-hmm. So
hey, we had the three-headed dragon chart. I posted it, and the next one we're looking at is slide 33, which is a U.S. dollar. Did you want to do that one next?
Sure. You have the dragon up?
Yep, I did the dragon, and the one after that is the U.S. dollar index, and we could just continue on to see what that looks like. Oh, I see the fear and greed index up here too. I think I'm in business. It takes me a while, but hold on. Let's get the fear and greed. You'll be able to see it. There it is at 70%, just like you said. So
okay, got it.
Oh, hey, we've got to take a break, and we'll get back. Let's discuss the U.S. dollar. How's that?
Sure, sounds great.
Okay, Shane Smolian, wolftrader.com, folks. We'll be right back. Shane, you there?
Yes, sir.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Shane Smolian, wolftrader.com. We're talking about the U.S. dollar, and there's been a question in the den. Shane, is the Bradley model, will it be affected by the U.S. dollar? That's the question.
Yes, it will. This is one of the points I want to emphasize. So are we on the slide with the U.S. dollar?
Yes, sir.
Okay, so there's a black slide there, and the one thing I want to emphasize here, now the dollar long-term has an inverse relationship with the S&P and with gold. Especially, so metals, currencies, and S&P, the dollar really, really affects these markets. But you get these spikes, like on the 21st of July, the 27th of July, and yesterday, the 19th. You get what I call a coin of phrase here called an everything up day, which is when the dollar has these huge spikes down, all the markets react and they all jump up together. And so you get kind of this chaotic environment where everything will just jump up together. And so as long as that dollar, first of all, that creates a layer of chaos right there. But as long as that dollar is falling, it's going to be really hard for the market to go down. The market, the dollar is going to really have to have some type of a bottom for the S&P to top. And so this is, like I said, part of that three-headed dragon. And the dollar is still falling. I have this still in the sell on the 1 day. So I'm not, like I said, the three heads of the dragon, the Astro, the Fed juice, and the dollar juice. Yes, the Astro is definitely topping. There is no doubt about it. You can look across the board. I don't care what you look at. If you look at the Bradley, if you look at the solar cycle, I mean, there's so many different things right now that are peaking. But as long as that Fed juice is in a buy, as long as the dollar is falling, it's going to be hard for that S&P to fall. So this is one of the reasons why I'm working on a hybrid indicator right now it's going to be called the dollar Fed juice, which is a hybrid between the dollar and the Fed juice. So that way we can understand in one indicator what's going on with the market. So it's just really tricky. I mean, in the dollar, I don't see that. I mean, as long as they're going to keep doing the stimulus, and next month Powell speaks at the meeting to talk about his thesis, about inflation, and as long as they're going to continue to have this accommodative policy, it's really going to be hard for this dollar to bottom. Now, there's other events that can cause it to bottom, but for the most part, the policy is going to be for a weak dollar, and that makes the S&P very difficult to go down. So I just want to put that out there. If you could go to the next chart, you could see the S&P. I have the S&P there, and we, like I said, we have these topping signals coming in. We have the planetary speed index coming into a sell on the 20th. We have the general combined transits, which the general combined transits is like a Bradley type of an indicator. That's topped already. I also have the intradays too that I tracked on those. I did a webinar last Saturday on that. But that's fine and dandy. But if that dollar is going to keep sinking like that, it's just going to be nearly impossible for the market to go down. And that's, and this is why I'm trying to tame this beast. And I say this is a beast because let me tell you something, between the Fed and the dollar and, those everything up days like yesterday that creates the chaos, it's a challenge. But I think that the new indicator that I'm working on, the dollar Fed juice hybrid, is going to really help us. That's actually in a sell right now. But I really want to see the dollar start to bottom. So if you could go to the next slide, I have the actual dollar juice indicator. And I do want to talk a little bit about the Bollinger Bandwidth too, because first of all, the RSI on the S&P right now is at about 79. And so I do study these RSIs, and it's getting up to a level that when it gets past 66, it tends to want to keep going up. So one of the things I want to point out here is that it's probably going to try to crawl back up to that 85, 87 level. And the dollar juice right now is still in a buy, but the Bollinger Bandwidth is the one thing I want to point out. So people who study John Bollinger's bands, they trade these in all different ways. I mean, some people trade them as support and resistance, and some people trade them to walk up the band. But the one thing that everybody agrees on, I think, with the Bollinger Band is that when that Bollinger Band gets very narrow, that you tend to get these really big moves in the market. And the Bollinger Band is actually falling now. It's really, really contracting, and it's actually down to a level that it was in February, right before the big decline. it's like 73. I use those of you at home, I use an RSI or moving average on the Bollinger Band of 10 and the deviation of 2. And I just take the difference between the bands. And when those bands contract, that's when you get the big moves. So it's the market is signaling that there could be a big move coming. There's no doubt about it. The question is, what direction is that move going to be? And I say that because to some people it looks so obvious, like, oh, it has to be down because all the Astro is down. Well, that's not necessarily true. Donald Bradley, when he made this indicator, he made this without a computer, and he sat there and he assumed that all squares were bad and all these harmonics were the same. But the reality is that if you study these charts, there's two types of a square, Larry. There's a front square or an applying square, and there's a separating square on either side of the chart. And those two aspects can have two very different meanings. So if I have a square that is, 90 degrees, and I have one that's minus 90 on the other side, they can mean two different things. Also, you have retrograde planets. You mentioned that yesterday. We have like 5 retrograde planets right now. So this can affect the Bradley. And so I believe this is one of the reasons why the Bradley inverts. So, Larry, you know this, that the Bradley has a history of inverting, right?
Oh,
and,
yes.
I think this is why it inverts, because Donald Bradley did not take into account the fact that, a front trine is different than a back trine, or a front square is different than a back square. And then he also didn't take into account the retrograde. So the Bradley can invert. That's the one indicator I tell people, like, if you're going to look for an inversion, it can invert. So, I think all possibilities are still on the table right now. And if I see the dollar bottoming, okay, if I see the dollar bottoming and I see the Fed use start to roll over, then I would say I would favor us to the downside. But I just want to put it out there to everybody that we should not assume that it's going to go down just because the Astro says that, because we've seen this Astro get burned many, many times when the Fed is strong and the dollar is falling. And honestly, the dollar is just going down, man. I mean, I spent a lot of time trying to get an indicator to track the dollar, and I feel like if you can master the dollar, then you can really master the market. That's really one of the, like I said, one of the big heads of the dragon. And it's a tough call. I mean, it's tough. So anyway, that's my synopsis on that. If the dollar bottoms and the Fed juice rolls into a sell, yes, we can go lower, but that is not happening. And so you got two heads of the dragon that are still bullish, and the other head is bearish. Yes, it's very bearish. The Bradley's in the sell and all that, but that's the thing you got to consider. So.
Okay. So what you're trying to tell the folks here is that trading is not easy. Is that the bottom line?
I'm saying that the S&P, you got to look at three things, and two of those three things are bullish. So,
Trading is simple and not easy, a la Mark Douglas. We'll be right back with Shane Smolian,
sure.
folks, wolftrader.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS, Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Shane Smolian, wolftrader.com, and we made a major breakthrough in trading, folks. If you missed it, trading is simple, but it's not easy. That was Mark Douglas's favorite quote, Shane. I just thought I'd bring that to your attention. We've got a chart of the RSI, and you're looking at a peak here at 65%. You want to start there?
Yes. So I study the RSI a lot. I like to study it locally on each trend. I mean, that allowed us to see that gold peak also before it ran down. But S&P tends to do these two peaks. It does one at 65, and then if you go to the next slide, it makes another peak around 85 to 87. So that tends to be the level that it backs off at. It did go up once to 91, but that I think it's probably going to try to go up there now. If it goes up to that 87. Again, it typically has about an 87% chance of reversal. And so, right now I think that's one indicator that tends to be reliable even with all of these different things going on with the S&P. So if we want to go down to the slide with the Bradley, I think it's like slide 30 that says Bradley 2020. I put a slide in there to talk about the Bradley.
Bradley 30. I don't think that's it. Let me double check, see if that is it. No, that's not it. The next one I have is the solar cycle. Oh wait, the Bradley might be the one right over that. Is this the one that here? I'll bring this up.
Slide 44 on your screen. Slide 44.
44. Okay, there it is. Okay, we got it. 10-4. Let's get this up here. We're ready to go. Here we go. There it is. Go right ahead.
Okay, so the Bradley. So let's talk about this. So Bradley is a really well-studied indicator, as we talked about. But in Bradley, when he studied it, he did assume all squares and hard aspects were negative, and we know that's not always the case. So I think that's why it can tend to invert. But the one thing I will say about the Bradley, if you look at it in 2020, the Bradley has been pretty good. It does better when the Fed is relatively weak. So, when in the first part of 2020, before we got this big decline, that the Fed, I wouldn't say they were weak, but they were much weaker than they are now. We weren't in a full-scale quantitative easing, and now we are in its full scale. And, it traced out the market here pretty well. The market climbed up into that peak. And so the peak is right around now, the 19th, right around today, tomorrow. The planetary speed index is also in a peak. But sometimes these peaks can be off a little bit. Like you can see in March that the market actually did bottom about a month early before the Bradley, and that's largely due to the Fed and what started going on with the dollar. But it's been more accurate in the recent years since the Fed was relatively weak. So the one thing we got to remember now is the Fed is not weak, the Fed is strong, and the dollar is weak. So that's some major bullish undertones here. So I'm not saying it can't turn lower, but what I'm saying is that when Bradley did this, there was no central bank, manipulating these markets or flooding the liquidity or all of this stuff going on. So it tends to work better when the Fed is not intervening as much, when the dollar is not necessarily having these huge spikes day to day. So, according to this, it should be peaking and falling into December, as do the metals. The metal seasonals peak in early September in just a few days. And Mars retrograde is coming up next month, which is negative for the metals, negative for gold. So, if the dollar bottoms, okay, I could see a scenario where everything falls. The S&P could fall, the metals could fall, and people think that just because gold is a safety play, an inflation play, and all these things, that it has to go up. It doesn't have to go up, and I just remind people of that. Mark Douglas said, you brought up Mark Douglas, and he always says this, at the market, anything could happen at any time.
And it usually does.
Like that we shouldn't just assume that gold has to go up because it's gold. It's possible that gold could fall. I mean, if the dollar rises, gold will probably go down, or it will have trouble rallying, let's just put it that way, and the S&P will probably go down too. So if we go to the next slide, I have a zoom of the Bradley so people can see this. And by the way, I used to put the Bradley in the newsletter, and I can put it back in for you guys. If you guys want to see it, it's not a problem. It's just I feel like the transits that I post are a little bit more accurate. I don't deal with the inversions as much. So this next slide has a zoom of the Bradley across the month of August and September, slide 45. Mm-hmm. And you can see it's kind of a broadening top. It kind of flattens out around the 18th and the 19th, and then it just kind of starts to fall into there. And we know that August is a bad month for the S&P statistically. It's the worst month in the last 10 years, at least percent-wise. And September is relatively, these are two relatively not so hot months. So, if I was just in a normal market where, like I said, where there's no Fed and I would say yes, definitely top. But I really hesitate because you could, we're in the age now with the Fed where you get white swans. I mean, people are so worried about black swans all the time, but you can get white swans, and you can get these scenarios where you melt straight up if you get on the wrong side of that trade. So I'm just kind of waiting for this. I'm kind of cautious right now, just waiting on the sidelines, and I'm just going to wait and see until the dollar or the Fed juice. At least if the Fed juice goes down, I feel like we have a chance. But right now it's rising, and the dollar's falling. So I would just say I am a little cautious right now on either side. I'm just kind of neutral on this, waiting to see. I got someone put in the room here. Could you post a few of those charts on StockTwits? Yes, I'll post these on StockTwits. No, absolutely. If you guys want to see that. There is an election coming up too, and we need to pay attention to that. The Democrat National Convention began 2 days ago, so they had their second night last night, and it's definitely a different environment with that digital glitch. It's a tough environment. I mean, it looks almost like an infomercial when you watch it. Larry, did you get a chance to watch it?
Oh, yes, I watch it. What I've done is I've recorded it, and I try to watch it, every hour. I quit trading, and I just watch the Democratic stuff, and then I'll do the same thing at the Republicans. No, I do not watch it. I have zero interest in it for many reasons, and anyway, let's just move on to the next one. I get ill when I hear about it. On both sides, I might add. So go ahead.
Yeah, no, it's super interesting. I mean, that first night I think was a little rough. Last night I think looked better. But Trump, it's interesting. Trump has spent a multi-million-dollar advertising campaign. The Democrats did not buy any advertising space across the convention, so he bought up all the advertising space. So there's this big warfare going on right now with the advertising. So he has all these digital ads coming out. So when you go to the convention, you see all these Trump ads come up. So it's really interesting right now. Things are heating up. The races it was like 14 points a month ago, the spread, and CNN has it down to 4 points now, and the battleground states are within a point. And I think that that's probably accurate. I always felt like the polls weren't accurate. I think this is a close race. Definitely too early to tell what's going to happen on this, but I am watching it with interest. And, you know, I think
Are you old enough to vote, by the way? Are you old enough to vote?
I think so.
Hey, stay with us. Shane Smolyan, wolftrader.com. We'll be right back from Democratic headquarters, Milwaukee, Wisconsin.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Shane Smolyan, wolftrader.com. And Shane, your charts of the Bradley model of the previous years are great. I have those. I've got all from 1885 up to the current, but they're on that big computer behind me, and my mouse doesn't work, and you know how technically oriented I am, so I've got them on there. But the main thing is that it's a rough idea of what the market can do, but may or may not do. And I think your comment about the Fed juice is so important, because the Fed is in there with both hands printing money. So maybe it won't work this year, but you know, that's neither here nor there. I hope that sums it up.
Absolutely. I mean, when we have more time, I can come in on another segment and talk about each year, but each year, if you go back and look from 2009, each year, you can clearly see when the Fed is active, the Bradley stops working. It's not as effective. It doesn't stop it. It's way less effective. So this is important because right now we have a strong Fed. So, it's anything is possible. And I just want to point out to people that white swans happen with the Fed, and people are so worried about the market dropping, but the market can go vertical straight up. If the dollar collapsed tomorrow, really, really collapsed, the market will go straight up. And it has nothing to do with the valuation of the market. It just has to do with the dollar declining in value. So that,
absolutely.
This is why I said it is a three-headed dragon. And at Wolf Trader, we're slaying the dragon for you guys, man. We got the newsletter. We got the dailies. We're giving you all the information here. Now, I'm doing my best, and I'm trying to adapt every day, and that's why I'm working on this hybrid. I'm working on the hybrid indicator right now between the Fed juice and the dollar juice, and I think we're getting a lot closer to modeling what's actually happening. It's a balancing act for sure.
Well, if you can break that dollar code, you've made a big leap forward, I think. So, hey, listen, thanks for joining us today. We really appreciate it. And may God bless and stay safe down there in Miami Beach. And we'll have you on again very soon. Okay, Shane?
Thanks, Larry. Take care, everybody. Thanks for hanging in today.
Okay, folks. That's it. We'll see you folks tomorrow. On the flip side, we've got the S&P at 89, and we'll be seeing what's happening today.